Hey friends, welcome to another episode. Today we are talking about reconciling your cryptocurrency transactions. So in order to produce accurate tax returns and properly track your ownership of crypto, you have to reconcile your accounts. So many of us are on multiple exchanges, right? And so you should absolutely be using software that tracks your activity on all of your exchanges. And go ahead and go back to episode 8 and check that episode out if you need to know some of the more popular tracking programs out there and the ones that we recommend. So once you've picked the tracking software, okay, you guys, we need to use it, right? And why? You guys are probably like, why do we have to reconcile? Okay, well, before you can even think about creating your tax reports that you have to file with your tax return, you have to reconcile your transactions. So for those of you not in the accounting world, you probably are asking, what does that mean to reconcile your accounts, right? So reconciling your accounts means that we are accounting for all of your purchases and all of your sales, okay? And that your today's total, your total balance and all of your investments is accurate, is basically what that means. So in order to do this, you guys, we have to ensure that you have the data from all the exchanges that you've ever been active on. And we need to collect all historical data from all the exchanges. Excuse me, not just the current exchange, or not just for the current year you sold. So we've talked about in prior episodes that selling your crypto triggers a taxable event, right? So a lot of clients assume that that just means they need their exchange of information from this year. However, if you've been buying your crypto for years and years and years back, you need all of that information as well, so you know what you own. You need an inventory of what you own, when you bought it, and how much you have. Okay? So let's talk about some of the common issues we encounter when we're reconciling our clients' accounts. So first is missing cost basis. This is by far, hands down, the biggest problem we see. And missing cost basis means that you're missing data or you have some incorrect data feeding into your tracking software. And if you aren't able to find those missing purchases or trades, you're going to have to use zero as your cost basis. And what that means is you're going to be reporting a larger gain than you actually have. So let me give you an example. So let's say you bought one Bitcoin a couple years back for 10 grand, okay? And you sold it for this year for, let's say, 8 grand, okay? If you have your cost basis, right, you know that when you originally bought it, how much you originally bought it for, that $10,000, and then we sold it, we know that we have a $2,000 loss on that sale, right? Are you with me? 10,000 minus 8,000 is 2,000. So we have a $2,000 loss. Let's say you can't find the missing data, meaning we can't find the original purchase of that crypto, okay, of that Bitcoin. Then we automatically have to use zero as your basis, which then means when we sell it for $8,000, you now have an $8,000 gain. So that is why it is so important that you make sure you collect all of your historical data going back to the very first time you bought and invested in any crypto. Because missing cost basis is the number one mistake or issue that we have when we're filing client tax returns. So another item we see every once in a while is duplicate data. So duplicate data could cause missing beginning basis errors or overstated closing balances. There's also mismatched coin balances that could occur. This could just be a reporting period issue that we just need to dig in a little deeper and figure that out. This typically happens if trades or sales or purchases are made at the end of a calendar year, at the beginning of another one. Sometimes they get reported in the wrong year. And then there's exchange balances, meaning when you exchange one coin for another, this is extremely difficult to get accurate, and why it is so important that even if you don't plan on selling your virtual crypto investment anytime soon, getting your records in order as soon as possible will help you, so that when the time does come in the future when you sell and you have to report it on your tax return, you've already been keeping records and you already have it all correct, okay? So all of this seems like a lot. Again, this is just an informative series for you guys to kind of understand what your responsibilities are, and really so you guys understand the complexity that is tax reporting for cryptocurrency and your virtual currency investments. So we really invite you to just contact us, Lipa Beers and Associates, for a free consultation. We're crypto tax experts, And if you need your 2019 tax return done, we're doing that right now. Or if you think you might have to go back and amend some prior year returns, 18, 17, even 16, give us a call and we can talk to you about how we can help you do that and maybe minimize some of your penalties and interest that might be there, and just definitely minimize your gains and maybe maximize your losses. So contact us today for a free consultation, and thank you for joining us today, guys. Bye.